ladies and gentlemen. It's our modern investing. My name is Sasha Starr, and I would like to introduce my esteemed colleagues on IBM TV, Pod TV show, Modern Investing. We'll start with Peter Bennett, who was professional on Wall Street,
Hi.
educated from New York University, and founder of this network, Nick Paliveda. Welcome to the show, Nick.
Oh, thanks, Sasha. Good to be here. Okay, sorry. Yeah.
Okay, so we've lived through about 2 weeks or so riot on Wall Street and Nasdaq and everywhere else you look. It seems to me it was a very successful operation of separating investors with their money. It's over by now, so all these holders of all kind of well, I wouldn't say garbage, but questionable Nasdaq stocks who were decimated. And I'm talking about quite good companies like PayPal, like Snap, like many, many others. Mondiant, one of those. So now it's all over. However, I would like to ask you how you weathered this riot, especially if we are talking about preservations of capital and the high yield dividend stocks did quite well in this ride. I must admit, I didn't expect that because I thought that maybe they will go down somewhat simply because all markets going down. But guess what? They did quite well. What about you, Peter? What you noticed?
Well, there's viewpoints. Yeah, there was a panic, which, I mean, the reasons for this, I think there's underlying reasons beyond what everybody's talking about right now. But the interesting thing was one, energy, which is one of the main reason I think that everything is operating now. And I want to get into that even deeper because I've seen more evidence of my thesis. And for a year now, I've been talking about energy. I mean, energy was the number one sector last year. It was up almost 50%. It's up the most this year, 19% in January alone. And last week it was up the most. But in terms of the general market, there is a panic because markets are high and there's fear of inflation and the Fed raising rates. But I've said already, the Fed is between a rock and a hard place because in 2018, they raised rates 2.5% and the market fell 20%. They don't want to hurt the market that much, but they're going to be fighting inflation for so many reasons. It's already here. And personally, I think that we may very well be in a phase of a decade or more, like in the 70s and 80s, which was much more than that, where we had 7% inflation due to energy. And I think we're entering that probably. And I have 10 reasons why, and the evidence is strong and strong on energy. But in terms of tech, I wanted to point out that because I think one of the safer places to be is tech. In other words, the places I am and the places I think people should be is number one, energy, without a doubt. And I added more to the energy I have even now, this last week or two. So, but consumer staples are good because they studies show that over a 50-year span, there was a study and it showed consumer staples did very well in an inflationary environment. And actually, on average, did better than inflation. So consumer staples are good because the companies can raise the rates, raise prices to match up, and it's a necessity. But also tech rebounded very quickly from this. First of all, actually on the rebound, tech came back. I saw as of last week, tech had come back 8%, where everything else, except for energy, which did extremely well, but tech was the second best sector by far. Everything else was 3 or 4%.
In tech, I'm pretty sure you're talking about big tech stocks, like, of course,
well, the
Google.
average tech. For me, it was even better because I like quality tech. I'm not going to be a
Only
PayPal.
quality, exactly. The other techs didn't do so
Oh,
well.
no. But I'm
They
saying
may recover.
right.
I
So there are.
Google, number one,
I
Microsoft,
know.
and Nvidia. Those three stocks, they stand out.
Yeah, quality. I think big tech is the place to be, or say if you can find little niches, but you have to be very careful picking it. I mean, look, the tech I have is Amazon, Microsoft. We have Google. My wife has Google, and I'm out of it right now. But in KLAC, these are really dominant companies.
Absolutely.
And they came back quickly. And Amazon.
And Google, look at their earnings. Did you see what
I know.
Google did?
Well, that's the thing. If you look
Imagine.
at their revenue growth, you see, even if there's inflation, these companies can continue to outgrow it. They can
Yes.
grow faster than inflation. And the history is amazing. I was going to get into the options, but I'll discuss it now because Amazon came up. So
Hmm.
that my Amazon, I was going to mention that I have 4,500 puts I've sold for 2023, and I'll just keep renewing it until Amazon hits, if it doesn't hit it by then. But it's so undervalued. Google went up a lot this last year or two, and Amazon stayed flat. But Amazon has 40% of online sales. AWS is growing. Its growth is incredible. It's got a 20 something percent price to cash flow. So that's not terrible in itself, but the revenue has been growing 29% a year, and EPS is 101% a year for the last 5 years, according to Ameritrade. So this is a machine. I mean, and they're executing so beautifully. They pay, and a lot of this growth, these numbers are slanted with a lot of these big tech, like Amazon, like Microsoft, like Google, because they're investing so much in developing and staying out of the market. But that could be cut back anytime they want. So Amazon put in new trucks, for instance. Now they've got, a new system of delivery where you can drop things off, at UPS daily. This costs money to implement, but they're staying ahead and of their competition, but they don't have to spend that much. And at some point they can just cut back a little bit of spending or just keep growing the revenue. So I love these companies, the big
But
tech.
you did notice the UPS, they went up substantially and they had excellent, fantastic quarterly report.
Yeah.
If you remember, I recommended a while ago UPS because I think in a time like now, the delivery means everything. The accuracy, the speed, the make it comfortable for people really to get something
Yeah, they
delivered.
execute well. I should look at
Yeah,
UPS
yeah,
again. I should look at
yeah.
it again. I don't know. You see, it probably doesn't have enough dividend for me because I like
Around
quick
3%. I think they
3%.
raised the dividends. Yeah, it's
Okay,
around
you know what?
3%
I'll look
now.
at it.
Well,
Now,
look at
here's my concern
Pfizer.
now.
Pfizer is paying actually less than 3% these days. But
Well,
Pfizer, that's in my opinion another exceptional stock. I'm looking forward to the report. I think somewhere in next week or two, Pfizer should report,
but
and
here's
I'm
my concern.
wondering what it's going to do.
Yeah, but here's my concern about Pfizer. Well, I have other concerns about Pfizer because I think the government. See, I think there's going to be a lot of inflation, and the Fed. I mean, the Medicare goes into deficit in 2026. The government is going to be looking for money, and where are they going to look first when they need money to cut back medical expenses? They're going to look to the drug companies. So if you get a 3% from an average drug company, I don't know, 2%, 4%, whatever, you're getting a little bit of your money back. And then in 26, 27, the government's going, wait, we're not pulling in money on Medicare anymore. Now we're paying it out. We've got to cut our expenses. Where are they going to look first? They're going to go to the drug companies probably. And you know what? It'll hurt the consumers in a way because then the drug companies are going to go, and this is why they'll do okay too. They'll say, okay, we're going to stop spending money on research or we're going to spend much less. So it's just like the tech, but it's not going to, it may not go well for them if Medicare cuts back too much on their reimbursements and things like that.
Peter, but I'm pretty sure it's already in price of the stocks, such as
Maybe,
Pfizer, for
I don't know.
example, because I noticed it was over $60 just a few weeks ago. It's
Pfizer, yeah,
now,
Pfizer's a very good company. Yeah,
it's now 53, 54 or so, and
yeah.
I think it's potentially $75 stock. Anyway, you look at it.
I wouldn't be surprised. I've always liked Pfizer among the drug companies the best.
I'm
They have
pretty
a
sure
great
they will
sales
do
force.
one of two things or both. They will
Yeah,
raise dividends and they will buy back their shares because they're
right.
relatively, speaking to other companies, they're relatively cheap. And I think it could be a combination of both, which will skyrocket the stock.
So
In my opinion,
here's my question. Before I get into why inflation is going to soar even more and energy is the place to be, because I came
mhm.
across so many things this week that point to energy, energy, energy. And for the next decade, probably, if you're not in energy, I don't know. It's like energy and everything else to me. But so what happens if we hit 7% inflation and energy is a tax? It's not like some companies' revenue might be good, but here it's sucking money out of the consumers and out of the economy and out of the businesses and everybody. It's a big tax. So if energy goes up a lot, and I'm going to make the arguments why it's very clear it's going up a lot, and it may go up to like almost catastrophic levels now. That's my fear for the economy. that it could go up to really catastrophic levels, even beyond, way beyond what they're expecting. And I have even more evidence of that. But what happens to a UPS? Do people then have to cut back and take less deliveries, or I don't know, but so all right, I'll do my energy, and inflation argument.
Peter, with energy, the peculiar thing about energy is that it will definitely affect all transportation complex, including
Yeah.
airlines, trucking companies, everything else. However, they will raise their prices. So at the end of the day, consumers are on the hook to pay
Well,
high.
but right. Oh, the consumers and the Fed are in such a tight area now for the average American and the people around the world. I mean, look, there's not enough, even if you don't look at all these facts, which I have here, there's not really enough energy for the world to have what it wants unless some new form is created, because the developed world needs a ton of energy, and then the other parts, the less developed world, is catching up, and they want energy, and they're saying, we don't even have energy to cook, or we have no cars, why don't we have cars? So as much as you might want to do alternatives, and in terms of alternatives, I mean, first of all, now we've had all kind of instances where in like Texas and California, where they say, oh, we're going to go with wind power, and it's like, no, you're going to need some alternative like natural gas, which is why most of my investing is pointing to that. So let me throw this out. This is just amazing different facts. First of all, the I've been saying all along, USAC has been saying that the energy and uh, E&P companies, which are the producers, uh, have been putting in 40% too little capex each year into their uh, exploration and production. So that means even though prices are high now, it's this is based on the last few years, but now they're spending less and less, and on the which is going to these are the future supplies, and they're not spending enough money on it. So see, Chevron came out this week with their expenditures for 22, and they reduced their expenditures by 26%. Now,
Very
ExxonMobil
serious.
came out with their budget through 2027, and each year it's down over last year 17 to 33%. Now, if
Mhm.
that's not bad enough, you go, wait a minute. They're spending less on production and exploration than they've been doing, and prices are already high. So where's it going to go when they're not? They have to be working now for the next supplies for the next decade. Now, even worse, with these expenditures, is another point is more and more of their expenditures are going to decarbonization. So let's one of the companies I looked at, it was 10%. So out of that budget, they're taking 10% and say, okay, we're going to develop, solar, we're going to develop wind, but they're not developing the natural gas and oil that everybody's depending on. And that stuff is, marginally productive, that money, that's also in development and everything like that. Then you look at the International Energy Agency. It it came out. They looked at their predictions for 2021. They were 200 million barrels off. It was 200 million higher, and everybody's saying, "Oh, their predictions are it'll all level off this year. Everything will be good." But they were 200 million off. That's a lot per day. And the thing is that all their predictions and everything is based on this is all during COVID, and we wait till people fly again, and people, and U.S. driving is already at records, but people, as COVID disappears, people will drive more around the world, so you look at that, and then you say, okay, how's energy not climbing? Then OPEC today they decided they're not raising their quotas. Well, I knew they were going to do that. Why? Because they haven't been meeting their quotas. They can't even produce what their quotas are right now. Very few of the countries even have the capacity, and the other ones can't do it, and they don't want to. They have to negotiate and everything. I won't get into the details, but the bottom line is it even could be, and I'm not saying it is, but years ago there was the theory of peak oil, but there's certainly with higher demand. I don't know if we're at peak oil or not, but I'm just saying that it's getting very expensive to get the oil out of the ground, and it's getting harder to find. So this is another factor because OPEC isn't coming through. Then you add and all that stuff on, and then you say, and then with all this, you have now Ukraine, and you have a situation where I think it's 2/3. This is my theory. 2/3. He's not going to attack Ukraine. He's probably just doing this because he's raising the price of oil through the roof, which is great for the Russian economy. But he's still going to
Absolutely.
attack. But if he does attack Ukraine, then it's going to make the situation in Europe even worse. Europe is already starved for energy. They're not getting the natural gas. Their prices are up phenomenally. I think it was like natural gas may have been up like 5 or 10 times or something, whatever it is. Huge rate increases in energy. And so when you add all of these up, you go, well, this does not look promising for reductions in cost. It rather looks very strong that this is going to drive possibly decades now. And the last one I have to throw in there, this is just incredible. On all this, then you have environmentalists and whatever, and I understand why they want to reduce, carbon. Obviously, there's arguments for that too. But then, if we're ready for this, in LA, they just banned new oil wells in LA. And the oil companies are saying your energy price in California is going to go through the roof. It's like you can't just shut it off and say, okay, no more oil, exploration in LA. It produces oil for California. So with that on everything else, it's like, how's energy not
Peter,
going?
but a couple of things. Number one is that OPEC, Russia, as you mentioned, they're a great beneficiary of rising prices.
Yeah.
But don't you think that it also plays well for companies like Tesla and other electric vehicles manufacturers?
Well, yes and no, because see, everybody thinks, oh, we're going to go to electric vehicles. We don't need oil anymore. Yeah, but first of all, again, I'm more natural gas oriented than oil. When we
Mhm.
get into the dividend section, I'll go over the
Sure.
the mix, but you still need to power those cars. That energy is coming from somewhere. And in Europe and I've heard in Boston right now, they're burning oil because they can't get enough natural gas because their pipelines, they didn't build enough pipelines to the Northeast. The liberals didn't want it done. Again, I understand to a point why they want to decarbonize, but so they don't have enough. So now they're burning oil in Boston, I heard today. And in Europe, they're burning anything they can just to heat their houses. And this is without Russia now, which and there's the geopolitical situation where Russia's now going to control more and more of Europe's heating supplies. And they're going to want natural gas from the United States, or anywhere energy. So, and by the way, Russia's supplying 15% now of China's energy. So they're giving more and more to China. And China's like, we got billions of people and we want the heat too. So there's competition around the world for energy resources, and they're limited, and it's a real problem.
Peter, but don't forget, speaking about a possible invasion of Ukraine by Russia, the
Mhm.
key to that is China. China
Why?
will decide whether Russia will invade,
Really?
when invade. Oh, absolutely. There are a lot of political things that are going on. For example, I mentioned on the other show that remember a few weeks ago there was a uprising in Kazakhstan, and Russia moved their forces together with other member states of
Mhm.
so-called ODKB. I'm not so sure how it's in English. It's basically the union of uh, well, kind of a loose union, I would say, between Russia and Asian country, former Soviet republics, such as Kazakhstan, of course, Kyrgyzia, Turkmenistan, which is very big in gas supply, and Uzbekistan and a few others. Maybe I missed somebody, but it was 4 or 5 countries. Guess what?
What?
Everybody expected that Russia will keep their forces like forever, like they did in Ukraine, they did
Yeah,
in
they might.
uh, Georgia, and so on. Guess what? In one day, all Russian forces were removed from Kazakhstan. What's happened? Apparently, China sent a friendly message to Russia that
Oh,
you've done fantastic job, but it's all over. Thank you. Okay, Russia moved their forces out of
yeah.
Kazakhstan.
What day was this? Today?
No, it was a couple of weeks ago.
Oh, okay.
The following week, I can give you the date. You can look up. It was January 25th.
Right.
There was a big meeting between all those members of this coalition of Asian countries and China. And guess what? Russia was not invited there.
Really?
Yeah, because
So what do you think that means? What do you think that means?
China wants to take over all this business of all these Asian countries, which
Huh?
are territories are on the border with China anyway. And China moves in with investments with all the proposals to help these countries.
Yeah, that's how they do
And
it.
Russia
Yeah,
is not being invited, period. Okay, so now
right.
Putin is coming to China on, I think, February 4th
Uh,
with the Olympic Games opening ceremony, and he will have talks with Imperator Xi. Now,
right.
guess what? So, Russia is being blocked on the east by China. Now, it's not doing well with this ultimatum to the West, NATO, United States, and so on.
Right.
So Putin has to now explain to Emperor Xi what is he exactly doing, where all this his ultimatums, and where they are going with all that rhetorics.
But they
They're
still do have 125,000 troops on the borderline, on the border of
Yeah,
Ukraine, right?
well, they're now scaling down, and they are saying now that it was
Really?
an exercise which they
Oh,
did
they are
in their
saying that
own territory. So,
now?
yeah, it was probably scary for Ukrainians to have that exercise as witnessing, but exercise is now over. So, I would expect
Oh,
that they will see. They're in no-win situation. When
right,
in poker you have continuation bluff. So, okay, you bluff, you put
right,
you have two and three against two aces, and you want to win that hand badly. So what you do, you put a big stake, say you put $10,000. So
right. Try
let's
to
see you
bluff.
with it's a bluff. So you just two
Right.
aces. Okay, I'm in. Okay, I'll play with you. So now what? It's now you
You
have
know,
to.
I think you're right. I
So it's
think that,
continuation bluff. So you now you put
right.
$100,000. So
But look
what
what
you
he
do
did
is
to the
to
oil
raise.
market. Look what he got the oil market moving even, but it would have been going up anyway. I mean, look, these the oil markets. I think it's up decade in a decade for more now. I think that's what I'm saying, that everything is
No,
pointing
no,
toward
I totally
more
agree with you. The situation with Russia and Ukraine just contributes somewhat to rising prices. It's not the reason
right.
why the prices
Right.
are rising. So now Putin has very little to show to his friends, Emperor Xi. But what's interesting thing that a while ago, Russia is supplying indeed, supplying 15% of gas that China needs. It's a Russian
Yeah,
supply.
that's what I was saying. 15% of
Now,
their
here's
energy.
the
Yeah.
history of that Russian supply. When
Right.
they started to talk several years ago about this, they needed pipeline to China to supply it. So what
Right.
China did, they said, "Yeah, that's wonderful. So you pay for a pipeline. It's your gas. You have to deliver." But they didn't say what are the prices that China is ready to pay. The prices are about the slightly over the cost of producing and moving that gas to China. So China,
Oh,
Russia hardly makes any profit on this. And
oh, so
so far as and they
China
invested
outsmarted
big
them too. They're tough negotiators. The Chinese are
they're
no
very
joke.
tough.
They're
But,
very tough business people.
but here Russia has abundance of gas. It has to move somewhere. So why not to China? Of course, China is a
Well,
big
and
consumer of
that's
gas.
very interesting, actually, what
But
you
they're
just
not
said.
making a lot of money.
Yeah, no, that's interesting. If that is the case, then they really do need to ship gas to Europe, because they have to somehow make some money somewhere for their own people.
Absolutely. But the Europeans now, with the help of US, by the way, they're making all deals with Qatar. Qatar has abundance of gas and good supply.
Oh,
The problem is a pipeline from Qatar to Europe. And in fact, if you remember this war in Syria, it was all about pipeline. Because
yeah,
if that pipeline has to go through Syria and then to Europe, and
yeah,
of course,
that's
Russia
trouble.
was fighting fiercely to
And
make
Russia
this
has a lot of control in Syria, by the way.
Absolutely. So
Yeah.
far they do control Syria. So this pipeline is not available yet. But we'll see if what future will tell us. So far, it's a more or less political situation, which affects prices for oil and gas big time. It's probably true. Now coming back to options, there are a lot of interesting developments in option trades, which I've done a couple of
Oh,
interesting things. But first of all, let's take a minute break for a commercial, if you have
okay.
one. Okay.
Maybe not.
Sounding
Well, we're
good.
running. We only have 5 minutes left anyway, roughly. So we have to cover dividend stocks too.
Okay, okay. Let's do dividends first. Okay, actually, speaking about chess, there is some investment opportunity in chess, by the way. I will try to let you know about it next show.
Yeah.
Remember the world champion Magnus Carlsen? He is, in fact, the largest shareholder and chairman of chess company. They're trading, I think, on the Norwegian stock exchange, and they will probably expand their listing maybe to Frankfurt and maybe a few other exchanges. So
Oh.
we'll talk a little bit more about next week. So about high yielding dividend stocks, Peter, what
Yeah,
you
it's all energy this week. Each week, the last few weeks of the show, I've been, talking about energy, and I keep saying I want to talk about some of the other safer investments. But then I'm increasing energy, and I'm going, this has got to be said again, because I increased energy over the last few weeks because I saw all these factors, and I'm going, it seems safer than ever. My only concern with the pipelines, which is the main thing, is that Biden would turn around and say, "Oh, we're going to, ban exports to Europe," but he can't possibly do that now, or Europeans will literally freeze. I mean, and if anything, so I think he's starting to understand why the importance of energy for the first time, is the realities of it. Just like it happened in Texas when they didn't, the wind froze, the windmills froze. So. For the all the ones I'm talking about, because I'm giving you an overview, are all very high cash flows. If you look at the price over the cash flow over the price, we're talking about 6 times, 8 times. These are cash yields of 13%, 14%, 12%. Every single one of them. I mean, yeah, all of them. So 4 of them are natural gas oriented pipelines. MPLX, I've always had over 20%. My only problem is now it's getting to be even much more than that, because now it's up even more. I had been liking it at 18, at 23. Now it's at 34 today. It's going to pay the dividend, ex dividend today. It'll be ex dividend tomorrow. So that's like 20% plus. USAC, I've stuck with that. It pays about 12% dividend. They make the motors for the natural gas. Then
yeah, sometimes
EPD, I increased to 1%. I was only going to make a third or something like that. And AM, I stayed with 2/3%. So those are the 4 pipelines. But the interesting thing was Goldman came out and said they expect the midstream sector to outperform, and they mentioned 3 midstream companies, and MPLX was one, and EPD was one, and then the other one is one I haven't gotten involved in, ET, but they own the majority of USAC. So indirectly, I'm involved with all 3 of these companies. But Goldman likes these companies a lot, and they liked a few other energy companies. Then I also increased Chevron. It's the first major company, but they just I moved that to 1% CVX, and they just came out with a 6% increase in their dividends just this last
yes,
week,
absolutely.
and it's paying about 4 point something. But I think that increase will continue. Now, I'm not. I'd rather have a 12% dividend, or I'd rather have an MPLX paying today 8 or 9, 8.5, and increasing. But so CVX, and then the one I'm most nervous about, but it's been soaring and it's very good, is Sunoco, and that's Sunoco.
Canadian oil company.
And they, unlike the others, they're not a pipeline or a natural gas. That is gas stations in the United States. But consumers are driving more, and it's paying. It has a nice dividend, easily covering the cash flow. I think it's got a 6 or 7 times, so it's about 13-14% cash flow, so they
And
can take a hit.
I
And they're
expect them
growing.
to raise dividends for sure. They will raise dividends. Slow.
Eventually, you would think so because they have or buy back shares. In a way, you almost don't care in a
It's
sense
about the
because if they
same.
have 14% cash flow, they can do that. Now, my caution about them, but I don't think it's going to be an issue for a long time. They've been soaring. Is that even if I'm getting 7 or 8%, at some point, if gas goes high enough, in a couple more years, whatever, in a year, 2 years, whenever, when it's people may have to cut back their driving because supply and demand curves say that that's where we're headed to a price that's going to stop people from driving, and that's a pretty high price, I think. So those are all those are like I think they're fabulous. It's in the energy sector, and that's the by far the most important part of my portfolio because that's the part I think is going to keep growing, generating the high cash flows. I mean, the consumer staples, you get 2% on them. Maybe they'll grow a bit. Fixed income, don't get much. Maybe you can get a little more in the future, but I don't think it's going to go up that much because the Fed will crush the market. So, and also the Medicare deficits I talked about in 26.
Nick, I would like to ask you, you have also a position in MPLX. Have you increased your position lately?
No, I've just kept it and watched it going up. It's like over 32, maybe a 33 a share, which
34
is it
today.
34 already?
That's
So,
because it's paying the dividend today. In other
oh,
words,
really?
if you
Okay.
you own
I
it
mean,
today, you get the 70 something cent dividend.
yeah,
But
I
if
mean, the thing
tomorrow,
is usually when it gets that high, I trade it, I sell it
Maybe
out.
after ex
I buy it
dividends,
back.
maybe it will go slightly lower.
Yeah,
well,
yeah.
yeah, I was about to say
Well,
that a lot of times they pay the dividend and then it drops more than the dividend, so it may not be a good day to buy. And I even
No.
thought maybe I should sell a little bit of mine, but you know what? I don't want to take the chance because
right.
I'm just holding it and holding it
Yeah.
because I don't want to have
See,
to buy it back higher.
I sold today some covered calls on MPLX
yeah.
simply because, okay, if it will continue go higher to a 35, 36 level, so I sold 36 calls, so I still have an upside. I generated some cash by selling these covered calls. We
Right.
will see which way it will
What
go.
was the what
Now,
was the premium on that? A dollar?
yeah, yeah, they're
$1?
still pretty good premiums.
For
Depends
what
what.
period? What period?
Yes, exactly. I sold March. A
Oh,
couple
okay.
calls. See,
Yeah.
February there is almost nothing to
There's
collect.
nothing. Yeah.
March is
Well, in a
almost,
worst case
especially if
scenario, it'll go through there, and you'll have to
it
you'll have to
could.
pay up. It could, because if energy, I mean, it's going up like so steadily, and I don't think it's changing. People are
Yeah.
realizing the
But you
situation.
see, there is a strategy again when I'm playing chess and I'd like to make some kind of at least plans for next 2 3 moves if I
Right.
can. So
Right.
in this case, let's see. Imagine that it will go to $36. I will just roll over. I will buy back the March calls and we'll say maybe May, June calls or something. But 38, not
Or you
36.
could have sold 36 puts, as another alternative, and then you would own the stock in a worst
I
case.
will. I would do that if MPLX will go down somewhat to 32, $31, even better. Then
Yeah,
I
it might. We'll see what
now
happens.
about selling covered puts. When Nvidia went down with the market, of course, it was down to 320, even below 316 at one
Really?
point.
Wow.
Yeah, I sold Nvidia 250 puts, and believe
Oh,
it or not, February 18th. So it's fairly close. So but I decided that at that price, let's see, 220 plus premium, each put is enormous premium, even so far out of the money. It was I've collected about um, 20 $2,200 for each put that I sold.
Hmm.
So today, Nvidia, of course, with the market started to go higher.
oh yeah, tech is just coming back
It
now. Yeah.
reached today already 250.
Oh,
It's,
good.
yeah, it's 250, even more. It was 253 in the morning. So what I did, I bought back the puts and make a very good money on each put. And with this proceeds, I bought a few hundred shares of Nvidia. So I
Oh,
get long on Nvidia. And actually, I'm selling very close covered calls on Nvidia. So that will generate even more cash. But also, same strategy as MPLX. If Nvidia will continue to go higher, so I will buy back. I will buy back the covered calls and it will sell farther. Let's see. I sold 260 covered calls. So if Nvidia will keep going higher, will reach 260, I will buy back to 60 calls and I will sell to 70 calls or so.
Yeah, I think tech is probably coming back again because it was an overreaction. And, tech is a lot of the companies are reporting. I mean, Google was up, I think 10% this morning when they
Yes,
reported.
of
It's like,
course.
yeah, exactly. I mean, and I think tech will keep coming back. It was an overreaction because you know what? If energy's going through the roof, tech is one of the few places you might still want to be. So, that's what I think. Anyway, I think we have to wrap up for today, right?
Yes, yes. Thank you so much for the show, for participation, and we'll look forward to see you next week. Thank you very much, IBM TV, Pod TV. Bye bye.